just as we had calculated credit purchases, we can calculate credit sales also. And for this purpose, we have to prepare total debtors account. The format of total debtors account goes like this. Since debtors are assets, so to balance brought down, it represents opening balance, that is balance in the beginning of the year. And by balance carried down here represents closing balance, that is balance at the end of the year. Now students, this entry here represents the amount received from debtors during the year. As when we receive the amount, the journal entry would be cash account to debtors. So cash is debited and debtors are credited. So this entry is put on the credit side, that is amount received. Then any discount allowed to debtors reduces the amount of debtors, so it is put here. Bad debts. Then any bills receivable issued to the debtors or received from the debtors, then the entry is bills receivable to debtors. The entry in that case is bills receivable to debtors. So debtors are credited, hence the entry on the credit side. Similarly, sales return reduces the amount receivable from the debtors. So sales return on the credit side here. On the debit side, we have entry for any check that is issued by the debtors that is dishonored, and any bills receivable that stands dishonored. Now they are put on the debit side because they restore the amount payables by the debtors. Once all these entries have been put here, what we will do is balance it out and calculate credit sales. And remember, it would be a balancing figure. Balancing figure. Let us consider an example to understand this account and to calculate credit sales.